Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at the SLV ETF, which is our proxy for the silver market. We're going to start with our Elliott wave counts as always and then wrap things up with some basic technical analysis at the end of the video. But before I begin, I just want to make everybody aware that unfortunately I have some imposters, or impersonators to be more precise, on my YouTube channel that keep cropping up, answering people's comments or replying to people's comments in the comment section using my logo and my channel name, subtly changed sometimes. Now they're always in these comments soliciting people to visit a email address or a Telegram or even a WhatsApp number, so just ignore it. It's a load of nonsense. I would never solicit any of my YouTube subscribers or viewers in that way, so it's obviously not me. I'm reporting and removing these comments whenever I find them. If you come across a suspect one, please feel free to report it too, and hopefully they will go away and leave us alone. It is unfortunately the case that they tend to crop up on the crypto videos, and well, as much as we enjoy the crypto space, or I do at times, it is unfortunate that some of the worst people alive happen to also be operating in that space and basically trying to rip off other people. So it's just a sad fact of life. So there's a heads up, so just be aware of that. I always leave a pinned comment at the top of the comment section video wherever I see this happening, just to help keep people aware. Right, so now let's get on with today's video. We're going to be looking at the SLV. Like I said, we're here on the 1 hour chart at the minute. We're gonna, well, we'll tell you what, we'll stay here actually. There's no need to come out any further. We've been looking at silver for months now, and we have two counts, both are the same and have been for months as well now, which is a completed running flat in a wave 2 into a primary 3, and the other one is an incomplete expanding flat into a primary 2, which is yet to complete. So here we are looking at the running flat completed and now into a primary wave 3, and the reason we've still got these two counts and we're still kind of in no man's land at the moment is we're just waiting for a new high to get past $28 here. And you'll have to excuse me, I'm constantly having to take little sips of water at the moment. My voice is failing me again, so anyway, so we're just looking for a new high of 28, and then we can abandon the bearish count and focus purely on this bullish one. But until we make a new high, we haven't got that kind of confirmation yet. So what we're looking at here, having completed the primary 2 and moving up into this primary 3, so far I've got 3 completed waves at minute wave degree, I'm guessing here, with 1, 2, 3, 4, 5 minuet waves within the minute 3, 1, 2, 3 completed minute, and now I think we're in some kind of wave 4. It's possible that the wave 1 is in, it's possible that this 3 isn't in yet and it's going to go higher. Just looking at the price action we've seen so far, if I zoom in and have a look at the more recent price action, we can see what to me looks like we can see 2 3-way moves, I think. Like this, A, B, C, A, B, C. So now I'm expecting 5 waves down into some kind of wave 4 target pullback, and then pressing on into minute 5 into minor 1. So let's just zoom out a little bit again to the 4 hour, I think, for a moment. I just want to bring up the volume profile now. I've got saved here a fixed range. Where is that? Bear with us. Is that hidden? Why is that not coming up? There we go. So here we've got a fixed range volume profile here, going from the high of our proposed wave 1 all the way up to current price data. It works the exact same way as our visible range does, but it's over a selected area instead. And as you can see, the point of control is currently right underneath where we're trading. So we've got a whole bunch of support here that needs testing if we come down. So let's just assume for a moment that we do come down. We could just continue marching higher. Like I said, this 3 might not be in, but assuming that this idea of an ABC is the correct one, and we are going to come down, then we've got a whole bunch of support to look to here. We've got a bunch of price tags here. The first one is this green line here, which represents the 38.2% retracement of the minute wave 3, which is this up to from this 2 to this 3 here. Then we have the 24.99. This represents a 1 123.6% extension of C equals A, so the C coming down and being 123.6 the length of A. This is a common Fibonacci target for a wave C extension, which we would be expecting because we're looking at an expanding pattern. It could of course be a running flat which would finish before the A, but assuming we get an expanding flat here, then we'd be looking at a 50% retracement at 24.67, which is 50% of this wave 3, and then 24.54, which is 161.8% C equals A, so a longer extension of the C relative to the A. So we've got a whole bunch of support down here if we do break down. And that's if we set a new high by the time this video is out tomorrow. You can forget about this because we still haven't put any kind of significant top yet. And if we keep pushing on and break this 28 high, we can be a lot more confident. But I just got a feeling, given the wave structure we see at the moment, that some more prolonged or at least temporary consolidation is on the cards. I've been expecting the same in gold as well, so I'm expecting it here in silver. Now, if it doesn't materialize, what do? We keep going up. So if we break through all of this, we should be suspicious at that point that we've done something more significant. We've either topped in a 1, or the bearish count that we're going to go over and have a look at in a moment is the correct one. So for those purposes, we have a minute wave 4 invalidation point down here, which is we cannot retrace the wave 4 into wave 1's territory below this level at 23.76. That would invalidate this minute wave count. And then finally we have a yellow line here, which may come in handy in the future. This represents a 61.8% retracement of the entire move up. This is based off of the idea that we were looking at a wave 1 completion from here, which I don't necessarily have a count for, but it's a possibility. So whole bunch of support levels to look at if the price comes down. And I say if because we keep climbing the wall of worry, or so to speak, at the moment. We just keep pushing up in both silver and gold, and it feels like a more sustained temporary pullback in this bullish move should be on the card soon, but it hasn't happened yet. If it does, these are our targets. So let's move over now and have a look at the more bearish count. Now this one works on the idea that we have yet to complete an expanding flat. We have not completed a wave 1 into a 2 as I suggest in the bullish count, but we've actually got a much deeper 2 to come much further away in time. And that's the idea that we have basically a total unravelling of most of the work we've done to get up to this high. We've come down in 3, up in 3, and we will come down in 5. 1, 2, 3, 4, 5. This works on the premise that the diagonal pattern we saw here was not an ending diagonal, which you can count as a series of 3s, but actually a leading diagonal into a 1. Okay, and then now we've come C equals A parity to find the 2 here, which is interesting. I'm just going to delete that minuet wave because this needs recounting, I think. 1, 2, 3, 4 would be my bet. Let's just pop that back on. Doesn't count very evenly, this doesn't look very cleanly. There's gaps all in the chart, which is always a problem. But whatever it is, it could be a WXY. We're just going to label it ABC as a zigzag for the moment because we've gone 1-to-1 parity. C is equal to A. We came straight up to that 100% parity at 26.49. Right, well actually a little bit below it. Just a little bit below it at 26.39. So 10 cents in it. And then came down, set another high just slightly below it again at 26.43. And then we were just a few cents off at that point, 6 cents off, and now we started to come down. Now we are moving up again today, and we have traded very tightly inside of this rising channel. We can see that we've taken our low here and our higher low here to position our channel. We've moved it up to our proposed A, projected it to find our C. So we've got A to B to C, and we are still trading in this channel. Now, like I said, this could be, we are still trading in this channel in the bullish count over here as well, where I've got this bullishly. So either way, I think what we want to be looking for is a breakdown of this channel first. If we get a break of this channel, then it could be the bearish count here, or it could simply be a pullback to support for a minute wave 4, and we will be looking for these targets here for the bullish count. If we get a violent breakdown from here, we have to be aware of the fact that we have potentially retraced a wave 2. It is quite a deep retracement. I'll say that. If we look at where we came straight to the 707, which is not an official Fibonacci level. Excuse me for a moment. And then came down, went back a little bit higher, didn't quite made it through the 707, didn't come to any other significant level. 78.6 wasn't touched. We didn't stop at the golden ratio. So it's not a great wave 2 retracement, doesn't fill me particularly with confidence for the bearish case there, but we did get that 1-to-1 parity of C equals A, so that does make me not confident in the bearish count, but it is a stronger argument for it. But if we stay inside of this channel and we continue to move up and bounce around and head higher, the deeper we go with this retracement, the less and less likely it will turn out to be true. And the less and less likely this bearish case is correct, until finally, of course, we reach our invalidation point, which is the previous high at $28. Any move through here invalidates the bearish count. You would likely see some kind of pullback and the continuation of the bullish trend afterwards. So we are still, unfortunately, in no man's land at the moment. We've got these two counts, potential bearish, potential bullish, but we can't confirm either way yet. We need to see a new high above 28, and then we can just be more bullish. And then it's a case of once we break that high, we look for a pullback, and we can continue to add to our position. Now, I've been in silver for a long time, but I always look for opportunities to increase my position, and I will be doing the same here. I own some mining stocks, I own some ETFs, and I would like the opportunity to get a more sustained pullback to add to those trades. However, we have to be aware of a possibility that if we do head south and all these support levels fail, we'll be looking through these levels first, then we'll be looking for a minute wave invalidation, then we'll be looking finally for bullish invalidation. If we make a new low below the 30th of March low, then this count becomes the primary count, the bearish count. So if I'm honest, and I will be, I always like to give my preference, I'm still bullish. I support the bullish count more. I think we have the right environment for gold and silver to continue to do well. I think gold's move off of the low after a long sustained wave 4 correction, it's got it on its journey to higher highs. And I think silver is a full step behind at primary degree. So we've completed a 1 into a 2 rather than a 3 into a 4 like in gold. So silver's only really just getting going. I mean, don't pay any attention to these numbers here, they're there purely for placement purposes later. But we would not, if we do get above this high and we complete minute 3 into 4 into 5 into minor 1, minor 2, then finally we'd be in minor 3, of intermediate 3, of primary 3, heading a lot higher. So my preference is still bullish. If we break down and we challenge or break through all of these levels, I will start to question that bullish bias. If we head much lower, I will likely abandon it in favour of a bearish count. If we do get a new high above 28, I will scrub this bearish count completely and throw my full weight behind the bullish one, looking for pullbacks as buying opportunities along the way. Alright, so we're going to leave the Elliott wave count there because I think I've rambled on enough. And we're just going to wrap things up with some basic technical analysis. So we bring up our indicators and we hide all of our Elliott wave count. We go to the weekly time frame and then we'll zoom in on the more recent price data and we'll see what we can see. First thing we're going to do is bring up our exponential moving averages, 10 in yellow, 20 in blue, 60 in orange, 250 in green. Okay, so what do we see here? Let's bring up our normal visible range volume profile here as well. So we have also an RSI set to a 10 close, green 30 level representing oversold, red 70 level representing overbought, and we have a MACD with a 10 for the short term moving average in blue, and a orange is the long-term moving average. A 20 is the long-term moving average in orange, I should say. So what can we see? Trading it above our point of control here on the visible range, also above the 10, 20, 60, 250 exponential moving averages. Bullish price action all round, really. We saw, however, 20 exponential has held support, been broken on a couple of occasions, but has been a major source of support here. We broke through it all the way back during September, bodied the candle above it, did the same, bodied the candle above it again, had a bearish candle close below the 20 for a week, but immediately followed by a bullish engulfing candle, gobbling up the entire previous week's bearish price action. We have had a wick to it, another wick to it, a wick to it here as well. Broken through it, big, huge bullish hammer here, signifying the bottom of this downward move for a week. Where the wick of the candle is easily 2, 3, 4, 5 times the size of the body of the candle. So big bullish follow through, 2 weeks of follow through, 3 weeks of follow through here, temporary consolidation into a wave here, another big bullish candle with a wick to the downside, big full body candle moving higher, had what looked a little bearish here, like a shooting star in the weekly time frame, very little body, not quite really, because we don't get the body of the candle down low enough, but we do have a big wick to the upside, which was potentially bearish. We haven't had any follow through yet, and we have since cleared the wick of that candle, which is also a positive. So all round looking very bullish. RSI also looking bullish, supporting this price move. We were in overbought conditions and had no move into oversold conditions, which isn't ideal for a wave 2. You don't have to see it. It's what I would call a round trip. We've gone from oversold to overbought here, so overbought back to oversold here would have been, for me, a nice thing to see for a wave 2, because that's what we're calling for a primary wave 2. You'd like to see a nice deep correction. We haven't got it. Momentum has remained underlyingly bullish the whole time. But if the bearish count is correct, then we are just coming into a wave 1-2 here, and we will now collapse. So the possibility of that overbought to oversold round trip is still possible. And over the longer time frame, our volume control, our point of control on our volume profile does drop to all the way down here, looking at this visible range, where we know the 61.8% retracement of the entire move up from the 2020 March lows is pretty much spot on with the point of control here, and that would support the idea of the bearish count, but no evidence at all of a major bearish reversal occurring yet. We have got you can't call any of this divergence yet. If we make a new high and we put in a bearish candle around the tops here, having made a new high, then you could be a bit concerned over what would be potentially divergence in extremely overbought conditions in RSI and lower highs here. The MACD would likely show the same, but this could simply be consolidation before thrusting much higher and getting back into overbought conditions again. The MACD has got the short-term moving average over the long-term moving average on the weekly time frame, green bars appearing on the histogram here, but it's not lift off by any means in terms of a shift in bullish momentum. So got to be a little cautious here, because this is not the kind of follow through we would expect to see before breaking a previous high. But if we do it and we do get aggressive here, we might have a temporary correction and then a violent thrust up. So we just need to see that. All in all, things still look strong and still look bullish. Daily time frame above the 10, 20, 60, 250 and the point of control here, just looking solid again on the day time frame. A lot of trading done in this long consolidation here. We can see really thick trading in the volume profile here. We've got a little bit of a drift lower in the RSI here. This could just be that sideways correction at 3-4 I'm expecting before a thrust back up into overbought conditions. Some bearish momentum building also on the MACD, crossover of a short over the long term moving average, but it does appear to be dying out. Lighter coloured bar here on the histogram. Short term moving average starting to slow and curve back up to meet the long term moving average, so maybe a temporary consolidation like that wave 1, 2, 3, 4 before a break to new highs. RSI is getting a little hot, but still not into overbought territory yet. Could thrust significantly higher in a move above the previous high. So all in all, from a basic analysis perspective, no sign of an obvious breakdown coming yet. Things still looking relatively strong. I think we do have a bit of an interesting pattern here. If it wasn't for this standout high, we could probably count this whole thing differently, but it does count to me like a 3-wave move, 3-wave move, 5-wave move, and then a move higher. It could be that 3-1-2. We do see, and this is going to bring all the numbers back up at the moment, just looking at the MACD for a moment. We have been shrugging off, the momentum here. After this big swing low in the March 2000 low, big race up to new highs in the 11th of August, consolidation since, and tightening structure in the MACD, not reflected in the RSI though. If we were to see this same kind of structure in the RSI, and we saw higher lows and lower highs, we'd be looking at a triangle most likely, as we often look for that confirmation in the RSI to support what we're seeing in price action. So just a curiosity, but nothing which says anything bearish, I don't think, really, in my opinion. Right, so we'll leave a basic technical analysis there. If you're new to the channel and you like what you're seeing, please subscribe, smash the like button, hit the little bell notification icon to remain informed of future video releases. Leave us a comment in the comment section below if you feel like it. And as always, thank you very much to my Patreons. Your support is greatly appreciated. And I will be getting your exclusive video out to you hopefully tomorrow. And if you are interested in joining the Patreon, there's a link in the description box below. Now is the best time to do it, right at the start of the month, and you'll get a full month's worth value out of it, depending on the tier you join. Obviously, tier 2 and tier 3 offer the most advantages. If you are interested, follow the link in the description box below. Go over and have a look. And also, if you're not following me on Twitter yet, there's also a link to my Twitter feed in the description box as well. Alright guys, take care, and I shall be back with you hopefully before the end of the week. Bye bye.